This next question, I think, is born out of an interaction you and Darius had at meetings. I don't know if it was in Boston or Kansas City or what, but please answer Darius' tweet, why are you not more bearish? So I think you kind of went in and we gave the outlook on quad 4. I think the question you got next was why are you not more bearish?
Well, I don't know. Like it's hard to define like how bearish I am. I mean, when I don't have one thing that I'm long, that I would be long if I was bullish. I think it's pretty clear. People on Wall Street want their hand held. They want a conviction level, whatever they want. But this one PM in particular, who's got good performance, said that. And being bearish enough, you can get really bearish the further you go into the earnings season. So I highlighted that this morning. If you get into because all I've been trying to do is say, get the hell out because we're in quad 4. That's a top-down reason, right? We're talking about growth and inflation slowing in rate of change terms, not only in the US now, but obviously globally, China, EM, and Europe in particular, which has been our call since January. But if you look at slide 62 in the current slide deck, which I spent a lot of time on this one, Ben. Obviously, you're the one who made the slide, so you're well aware of what it looks like. But if you guys could pop that up there. Can I doodle on this? Because this will take a little bit of time. All right? And I can guarantee you that the guy with the tree that just fell on his head in New York City is not talking about this. All right, this is important. And it's, again, all about the rates of change. So what you see on this table is the S&P 500 broken down by sector. In the top part, you're seeing year-over-year growth rates, rate of change growth rates in sales. And in the bottom part, you're seeing the year-over-year rate of change or growth in earnings, okay? So this should be something that you have taped either inside your melon or inside your notebook or both. These are things that you should know. Okay, it's just like the wind in the tree with the guy on the bike. If you don't know where it is, you could have a very bad day. But I would prefer to know these things. So again, it's all about awareness, getting away from ignorance to awareness. So again, let's do a little bit of a circling here, all right? I'm gonna go back to my girlfriend pink, or a little purple maybe, it might look a little purple on top of the green. And we're gonna circle what happened here in Q2 of 2018. 25% year-over-year earnings growth in the S&P, but most importantly, in technology. Look at this run we went on in technology. Where are we going here? Start at 20% here, just cruising along, whammo, up 32%. That's as good as it can get. All right, so my question, and by the way, you did the 32% because back here in Q2 16, you're lapping up against a negative 7.3, okay? So when you have on a 2-year look back, negative earnings, the probability of having positive earnings when we're on the positive side of an earnings cycle, fully loaded with tax reform, a globally synchronized recovery, the biggest stimulus in the history of China, you're probably gonna have some pretty good earnings. But can you get to 32% earnings ever again? What is the likelihood? We've already, by the way, in Q3 18, the number is 26.6. We're going 26.6 against the first positive compare, plus 3.9. What's gonna happen when we have to compare against plus 20% earnings growth in Q1, all the way to up 32% in Q2 of next year? That's where stuff can get really gnarly, okay? So again, if you kind of go to how bearish I can get as bearish as the market wants to be. But that is a catalyst that is way out there in terms of the forward outlook relative to even the quad 4 outlook. Now, the final thing I'd say about the outlook on quad 4, everyone wants me to go back to quad 1 or 2 because that was our call for 2.5 years. That's not where we're going after quad 4. We're not going to another big bullish party. We're going to quad 3, which is actually the worst quadrant in terms of equity multiple compression. Multiple goes lower that we have historically in the playbook. Quad 3. So again, if you look at we're going quad 4, quad 4, quad 3, quad 3. That's the next 8 quarters. And again, why we've stuck to it and why, define how bearish you want to be. Just don't say that you're bullish because some market bounced and you need to be or have to be or you want to be.